Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. We are diving deep today, straight into the results, the numbers that are really defining movement in the small cap world right now.
That's right.
We've pulled 5 crucial updates. We're talking military contracts, some really exceptional drill results, and major facility completions. And our mission isn't just, listing headlines. It's about analyzing the tangible metrics. We're looking at the dollar values, the IRRs, the drill intercepts, the length, the grade.
The stuff that matters.
Exactly. The things that should immediately move these companies onto your research watch list.
Yeah, and we're structuring this this deep dive around a core tension, really, something you face as a small cap investor all the time. That trade-off between de-risking a project versus pure exploration upside.
Yeah.
So we'll kick off with 2 stories, focus more on execution, financial visibility, and then jump into 3 high-impact exploration updates. Sound good?
Sounds perfect. Let's unpack the first one. This is a major operational milestone, definitely in that de-risking category. We're starting with ESGold Corp. That's CSE, ESAA, and OTCQB, ESAA.
Got it.
The headline really marks a critical shift. ESGold completes Montauban mill and enters commissioning track, targeting first output in 2026.
Right. And what's essential here, I think, is that they've crossed a threshold. They've gone from spending capital, that expensive construction phase, into commissioning. They've finished the main processing facility, the gold room, the lab up in Quebec. And for you, the listener, this completion, well, it's not just a photo op. It dramatically cuts the execution risk.
Okay, so let's put some numbers to that de-risking. The key financial nugget, what investors need to see, is the project economics underpinning this move. What's the PEA telling us now construction's done?
Well, it speaks volumes. This is fully permitted, it's funded, and it's advancing under an updated PEA that shows an after-tax net present value, the NPV, of a pretty compelling $24.27 million.
Okay, that's solid.
And even more impressively, the internal rate of return, the IRR, is 60.3%.
Whoa, wait. 60% plus IRR.
Yeah.
That's exceptionally high for a mining developer, isn't it?
It really is.
I mean, most big projects, they target maybe 20, 30%. Why is that number, that specific figure, so crucial?
Because that high IRR signals, well, extreme profitability and capital efficiency. It means the project throws off cash significantly faster than the capital you put in.
Right.
And management's reinforcing this. They're explicitly targeting a payback period of less than 2 years from the start of production. That's a fast return cycle.
Less than 2 years.
Yeah. The CEO, Gordon Robb, he summed it up well, saying they're, quote, transitioning us from construction to commissioning and representing tangible progress toward near-term production. So that pathway to gold and silver in 2026, it looks pretty locked in now.
Okay, good context. Let's move to our second story, sticking with stability for a moment. Okay. This one's about revenue visibility. We're looking at the defense sector, Airbus of America Corp. You'll find them on the TSX as BOS and OTCQX as ABSSF. The report is clear. Airbus wins up to US $8.1 million order from Canada's Defense Department for next-generation gas masks.
Yeah, this is a classic case. Securing reliable cash flow, especially, against potential economic uncertainty. The headline amount up to US $8.1 million, that's important.
Sure.
But the strategic element here is really the sustained timeline.
Okay, walk us through that timeline. Why is the delivery schedule itself such a driver for investor confidence?
Well, the deliveries for their advanced low burden mask, the related accessories too, they're scheduled to run from Q1 2026 all the way through Q1 2027.
Ah, right. So multiple years.
Exactly. It's not just a one-off payment. This provides guaranteed revenue visibility across multiple fiscal quarters.
Right.
And if you connect this to the bigger picture for Airbus, I mean, they have a diverse business, right? Including things like automotive rubber solutions.
Which can be pretty cyclical.
Notoriously cyclical, yeah. So this defense revenue, it acts as a kind of financial hedge.
Makes sense.
Precisely. It's a reliable anchor. This recurring revenue stream, it's a mission-critical gear, reinforces their position from a long-running support agreement, and it helps stabilize their overall financial outlook. Doesn't matter if there are temporary dips in, say, their industrial or auto divisions.
Right. Consistent execution in a key area.
Exactly. High-margin, mission-critical.
Okay, now let's pivot sharply. From financial stability to pure exploration upside. We're starting with a story about scale. Up in British Columbia's famous Golden Triangle.
Ah, the Golden Triangle.
Kingfisher metals, that's TSXV, KFR, and OTCQB, KGFMF. They released results that, well, they caught my eye, certainly. Kingfisher Metals extends gold footprint in British Columbia's Golden Triangle with longest Hank intercept to date.
Yeah, this is where we start talking serious geological scale. The key result is from hole HW25006. It's their longest intercept ever recorded there, a massive 241.0 meters.
241 meters.
Grading 0.28 grams per ton gold. And critically, inside that huge intercept, there was a tighter, higher grade core, 110.0 meters, grading 0.47 grams per ton gold.
Okay, now the Golden Triangle, it's famous for those super high grade narrow veins, right? Bonanza grades.
Yeah.
So why is a lower grade like 0.28 gram over that kind of width considered such a huge success here?
That's a really excellent point. It suggests a totally different style of system might be present. High-grade veins, yeah, they offer spectacular hits, maybe shorter mine lives. But a bulk tonnage deposit, basically, a huge volume of rock, you can mine less selectively.
Right, more like an open pit scenario.
Potentially. That offers much lower development risk, potentially a much longer mine life. So that 241-meter intercept, it points directly towards the potential for a large, near-surface, bulk-tonnage gold system at their Hank target.
Interesting. But the scale story didn't stop there, did it? They hit something even deeper down.
Correct. Below that gold target, they hit a potential copper-gold porphyry system. This was at a separate target called Williams. That deeper hole cut an astounding 548.1 meters, grading 0.31 grams per ton gold equivalent.
Wow, over half a kilometer.
Yeah. And a porphyry system, well, that's often seen as the engine room, the source, for these massive mineral districts. The CEO, Dustin Perry, he highlighted this concept of a, quote, large near-surface gold system situated above a larger copper-gold porphyry target.
So you've got this dual target structure potentially. That drastically changes the value proposition, I'd imagine. And you mentioned something earlier. What makes Kingfisher's asset maybe stand out from some other big Golden Triangle discoveries?
Infrastructure. It really comes down to access. Kingfisher's targets are close to existing road and power infrastructure, specifically Highway 37. And in the remote parts of BC, building roads, power lines, that CapEx can sometimes eclipse the cost of the mine itself. Being near existing infrastructure is a huge differentiator. It materially lowers future capital costs, makes the whole thing much more attractive for potential development partners down the line.
Crucial point. Okay, moving east now to another critical gold region, the Abitibi Belt in Quebec. This time the focus is on mineralization continuity. We're looking at first mining gold Corp.
FF on the TSX.
Right, TSX, FF, and OTCQX, FFMGF. News from their Duparquet project. First mining expands shallow gold discovery at Duparquet project in Quebec.
Yeah, this one's all about proving up their Miroir discovery. They're focused on extending known gold near the surface, and they hit some strong, consistent numbers, things like 2.01 grams per ton gold over 29.8 meters.
Solid.
And another hit, 3.20 grams per ton gold over 15.75 meters.
Okay, those are robust grades, good widths. But for a company that already has a huge resource, what is it, over 3.4 million ounces?
5.44 million, yeah.
So why is proving up this specific, shallow, continuous stuff so vital right now?
Because of one word their CEO, Dan Wilton, used. Optionality.
Optionality, okay.
Look, a project with millions of ounces already defined usually needs a big initial capital spend. But shallow, high-continuity mineralization like they're finding at Miroir, well, that's desirable because you can potentially mine it easily, affordably, maybe in the first few years of operation.
Ah, so it could add high-margin ounces right at the start.
Exactly. Boost initial cash flows, improve the overall project economics. It helps pay for developing the bigger, deeper resource, essentially de-risking that large capital investment.
Got it.
And these intercepts, they extend the zone to about 100 meters along strike, 100 meters deep, and it's still open. They've got 8 more holes pending.
Oh, okay.
So this Miroir zone, it's rapidly strengthening its case to become a key part of Duparquet's future mine plan. Adds immediate value to that massive existing resource base.
Makes sense. Okay, our final flash for today. This one focuses on pure, breakthrough, high-grade, maybe in a bit more of a frontier district. Papua New Guinea. Great Pacific Gold Corp.
GPAC on the TSXV?
TSXV, GPAC, and OTCQX GPGCF. And the headline really speaks to accelerated discovery. Great Pacific Gold hits 5.9 meters at 14.4 GT EDQ at Wild Dog Project PNG, expands Phase 1 drilling.
Right. And when we talk about game-changing exploration hits, these are the numbers that just jump right out. Hole WGG12 reported 5.9 meters, grading 14.38 grams per ton gold equivalent. That's AUEQ, so it includes value from other metals like silver too.
14.4 grams.
Yeah, and inside that, a very high-grade core, 2.5 meters at an astounding 32 grams per ton gold equivalent.
32 grams.
Yeah, and this comes after an earlier hole, WDGO8, that hit 8.4 meters at over 50 grams per ton AUQ.
Wow. Okay, 14 grams, let alone 32. I mean, that's truly exceptional grade at any stage of drilling, isn't it? That's many times the average grade of most operating mines globally.
Absolutely. It's world-class grade potential.
So what's the strategy now? How do you move this from, spectacular one-off hits to proving up a real resource?
Well, you maximize your efforts. You accelerate development. That's crucial when you hit grades this high. So they're shipping in a second drill rig, a dual-purpose one. They expect to have 2 rigs turning by December 2025.
Doubling down.
Exactly. And they're pairing this aggressive drilling with high-resolution LiDAR mapping.
Okay, why the LiDAR mapping specifically?
Better targeting. LiDAR is essential for seeing the geological structures, the faults, beneath dense jungle canopy, which is obviously common in PNG.
Right, you can't just walk around and see the outcrops easily.
Not easily, no. So this lets them precisely locate where these high-grade veins might continue along that big 15-kilometer structural corridor they're exploring. It's a classic strategy, really. High risk, potentially very high reward. Confirm the exceptional grade, then rapidly boost the drilling to prove continuity and scale.
Makes sense. Okay, so wrapping this up, what does this all mean for you, the listener, as you maybe prepare for your next layer of due diligence? We've covered a lot of quantifiable movement today.
We really have.
We saw ESGold complete construction hitting those milestones with, frankly, compelling project economics. Then Airboss securing multi-year defense revenue, adding that financial stability.
Right, the de-risking side.
And then the exploration plays. Critically, we saw 3 different gold companies reporting high-impact drill results. Kingfisher confirming potential scale bulk tonnage and that deeper porphyry system. First, mining proving up valuable shallow continuity, adding that optionality. And Great Pacific Gold demonstrating exceptional accelerating high grade in PNG.
Yeah, covering scale, continuity, and grade across those 3.
So this compilation, it gives you the key tangible metrics. The economic returns, the revenue timelines, the physical drilling results, the numbers you need to decide where to focus your next level of research.
That's the goal.
And as you weigh these updates, prepare for your own due diligence. Maybe consider that core trade-off we talked about at the start. When you're evaluating a small cap developer, what offers the greater, maybe the more immediate value? Is it proving low execution risk and capital efficiency through construction completion, like ESGold?
De-risking the project.
Or is it hitting those breakthrough high-grade intervals that exponentially increase the target scale, the pure discovery upside, like we see with Great Pacific Gold? That tension between de-risking and exponential upside. Well, that's really where the toughest and maybe the most rewarding small cap investment decisions are made.